All right, today we're diving into a company that's probably not on your radar, IES Holdings. And we're asking a really interesting question. Could this, of all things, an electrical contractor, actually be one of the sharpest ways to play the whole AI boom? So if you're an investor, you know the feeling, right? The AI gold rush feels like it's all about a few mega cap names. But what if there was another way in? A kind of backdoor play? A way to ride this massive wave of innovation without just piling into the same handful of stocks everyone else is chasing? Well, it comes down to that classic investing wisdom. During a gold rush, you can dig for gold, or you can be the one selling the picks and shovels. And believe me, in the AI gold rush, the picks and shovels are the absolutely essential physical infrastructure that makes any of it happen. And that's exactly where IES Holdings, or IESC as we'll call it, comes in. Now, on the surface, okay, they're an electrical and mechanical contractor. Doesn't sound too exciting. But when you look just a little closer, you realize they are right in the thick of it, building the very engine of AI, the data center. So, to put it simply, IESC is the perfect example of a picks and shovels play for our time. I mean, think about it. AI models need just a staggering amount of computing power. That translates directly into a historic boom in data center construction. And guess what? Every single one of those data centers needs the super complex, can't-fail electrical and network guts that companies like IESC put in. But here's where the story gets really interesting. It's not just about the data centers. What makes ISC so compelling is how that one super hot business fits inside a much bigger, more stable company. Let's peel back the layers on this. Okay, so the company is basically split into four parts. You've got the residential side, wiring up new houses. Then there's infrastructure solutions, which makes custom power equipment. You've got commercial and industrial for your big office buildings and factories. And then you have the star of the show, the communications segment. That's about a third of the whole company, and it is all about data centers. Now, here's where you see the magic of this model in action. Let's look at the third quarter of fiscal 2025. The residential business, it was down 8%. And that makes total sense, right? Interest rates are high, the housing market is feeling the pressure. That's just a normal cyclical downturn. But at the exact same time, look at what was happening in their communications business. An absolutely incredible 56% jump in revenue. This wasn't tied to the economy. It was fueled by the unstoppable long-term demand for data centers. That's not a cycle. That's a whole new era. So, what's the result of all that? The massive long-term boom in data centers just completely steamrolled the short-term slump in housing. The bottom line, the company as a whole still grew by almost 16%. That is the beauty of this strategy right there. You get a powerful growth engine, but it's built inside a much more stable machine. Okay, growing the top line is great. But honestly, the story gets even better when we look at the profits, because this is where you can see that something has fundamentally changed inside this company. Just look at these numbers for a second. In 2022, their operating margin was just 2.6%. Pretty typical for a contractor. But then look what happens. By 2024, it's over 10%. It nearly quadrupled in just 2 years. And that huge jump between 2023 and 2024, wow, that tells you everything. This isn't just gradual improvement. This is a company hitting a major inflection point, shifting into much more profitable, much more complex projects. And all that profitability leads to this absolutely stunning number, a return on equity of almost 37% in fiscal 2024. Let me be clear, for a company in this industry, that is an elite, top-tier number. It's a huge sign that management is just knocking it out of the park, taking shareholders' money and generating fantastic returns with it. This also puts them in a really sweet spot in the market. You have these massive competitors, the MCORs of the world, and IESC is much smaller than them, but that's actually its superpower. For those giants, even a billion-dollar business is just a drop in the bucket. But for IESC, its data center business is so big relative to the rest of the company that it can totally move the needle, driving huge growth for the whole operation. All right, so let's pull all this together. What is the actual bull case here? If you're optimistic about ISC, what are the core arguments you're hanging your head on? Well, for starters, you've got these huge, long-term tailwinds from data centers and the whole electrification trend. That's not going away. Second, their balance sheet is a fortress. They literally have more cash than debt. Third, they're smart about buying up smaller companies in a very fragmented industry. And then there's this last point, which is so important. All the things that are problems for the industry, like a shortage of skilled workers, actually help ISCC. Why? Because it creates a huge wall that keeps smaller competitors out. They just can't compete for the best people or get the same financing. Okay, but it can't all be good news, right? Of course not. No investment is a sure thing. So now we have to look at the flip side. What's the bear case? What could go wrong here? The biggest issue, hands down, is the price tag. The stock's PE ratio is way, way above its historical average. Put simply, the secret is out, and you're paying a premium price for the story. Then there's the risk of putting too many eggs in one basket. The more they depend on data centers, the more it's going to hurt if that spending ever slows down. And let's not forget, they still have those other businesses that will go up and down with the economy.
So let's bring it all home. What's the bottom line for an investor looking at this company right now?
You know, this quote really nails it. The market has woken up to what's happening here. Investors are no longer looking at IESC and seeing a boring, old, cyclical contractor. They're seeing something different now, a high-end specialty company that is absolutely critical to building out our digital world. The company has been fundamentally re-rated by Wall Street. And that, right there, leads us to the final critical question that you, as an investor, have to figure out. Has IESC really become a premium company that's worth this new premium price? Or has all the hype around AI just caused the market to get a little too far ahead of itself? That is the billion-dollar question.